Hey everybody, welcome. I'm out here in gorgeous Kirby Cove in San Francisco. You can see the Golden Gate Bridge right there. A lot of people are asking me, hey, what's going on in the market right now? As I'm filming this, it is mid-October 2020. A lot is happening, basically historically low interest rates and just a lot of condos as well as houses that are on the market. So is it a buyer's market? We'll see. There's a few charts I wanted to share with people, and let me go ahead and share my screen here. Let's see. So if we go down to some of these charts here, a few of them that I wanted to point out was, let's look at, first of all, a lot of my friends are actually renters. And so here's what's going on in the rental market. As you can see over here, rents have dropped about 15% or so. One thing that's the difference between rentals as well as homes is when we're in the middle of an economic recession, rents are the first ones to drop really fast. Homes usually take about 4 or 6 months, possibly even a year, before they start catching up to everything. But as you can see here in the .com, we averaged about 2,200 in rents. It dropped 25% when we went to the .com bubble, when that popped. And then over here in the financial crisis, not that big of a difference. As you can see, just 5%. And then what happened was there's massive employment in San Francisco, as you see in these trends here. And then currently they've dropped about 15%. We'll see if that trend continues though. The other thing that also really affects everything as well is if you go to employment trends. And the interesting thing about employment trends is that's one of the big factors that actually drives home prices. So you can see here in San Francisco, we've had massive amounts of unemployment, or employment, should I say, and then we've had a dip here. We'll see what happens if that trend's going to start going up. It looks like it is, and if it is, then home prices should follow up in that direction as well. Another chart I wanted to show here, big reason why home prices are going up is because interest rates are going down, as you can see along this trend. I mean, a 30-year fix in the threes, that's crazy low. And so the interesting part about that is over the last 2 years, you can see 4.75 down to 3, that's basically 2%. Now, every time the interest rate drops 1%, that's 10% more buying power to you as a buyer. So on $1 million home, if the interest rates drop 1%, now you can afford 1.1 million and still have the same payment in terms of your mortgage payment. And that's a big thing that people don't realize is they're seeing the home prices going up and interest rates are going down. In terms of your purchasing power as a new buyer, we're actually looking at 2016 levels. So could be a good time out there to buy if you've got some extra cash laying around. Another chart I wanted to show you here was the condo appreciation over the last 25 years. Now, what's interesting here is, and I always tell my buyers this, is every time we have a little bit of lull here, .com, obviously great recession here, whatever you lose in appreciation, you usually make back in 1 or 2 years once that upswing happens, as you'll notice in these areas here. So you can see we dropped 7.4%, puddled around at 4.8, added on another 2, you're at 7, then you go up 16, go up another 16. Drop down here where we dropped, it looks like maybe a total of 17%. And then in 2012, you almost made it right back. So rule of thumb that I always tell people is you want to be in your home for at least 5 years. Even if you're buying at the peak, you'll at least probably break even after 5 years. After that, you're going to start making money. And typically 7 to 10 years is when you double your money. So I wanted to show that chart. And then another interesting one that I want to show here too is, now this is on home appreciation. And again, once we saw those employment trends skyrocket, interest rates go down like that, you're going to see home appreciation go up. And in 2012, we've had massive appreciation. And back to what I always tell my buyers, if you buy a home, usually about 7 to 10 years, you're going to double your money. So, and that's pretty much almost anywhere in San Francisco. So it could be a good investment for you. And the big reason why condos are never going to appreciate as much as homes is they're never buying, or they're never building any more homes, should I say. They'll put plenty of condos out there, but the homes are done. There's no land for it. All they can do is keep going up. Obviously, difference though is if you're buying $1 million, you want to be more in a better neighborhood, more in the center of San Francisco, or if you buy a home, you're going to be more on the outskirts. Another chart I wanted to show here as well is now this gets back to listings, and look at this. This is insane. 74% above where we normally are in terms of active listings in September. That's just insane. We haven't seen those levels in such a long time, which I'm going to show in the next chart. Obviously, the more listings, less competition out there for you as the buyer. Not quite as good as obviously if you're a seller. Another chart I wanted to show you was 4 years of active listings on the market. And this again goes to what I was showing here. You can kind of see we're usually puddling around, during the peak times of spring and fall season for San Francisco, usually 800 to 1,000 listings. During the low points, as you can see down here, we're in the 500-600s. But look at this. This is massive. I mean, we're pushing 1,700 listings just in September. And if you're a seller, you got to get all those sold, usually by November 1st, maybe mid-November, because otherwise the trends for seasonality are going to start shifting. As a buyer, doesn't matter quite as much. I don't ever suggest anybody wait for things to go down or go up. It's whenever you're ready to buy. And I always talk about the 3Fs, which is basically future, finance, and family. When those start aligning, that's when people are ready to buy. And then another chart I wanted to show here too was, this is seasonality, which I just mentioned a little bit before. In San Francisco, you can see during the spring markets, you're going to have definitely several more months with new listings, more things going into contract, obviously accepting offers. October is a big month. And then as I mentioned, you have to sell everything by usually November, maybe mid-November, because there's going to be a big drop here as people get into the holiday season. January, December, February, people don't want to look for homes quite as much. And this is what's interesting in terms of the pandemic. You saw this big drop here, and then all of a sudden we're getting a spike now as people are shifting. 1 bedrooms, people are wanting to upgrade to 2 bedrooms, 2 bedrooms to 3 bedrooms. You are hearing people want to leave the city as well and get more space. Another chart I wanted to show was the median sales price. Now, I thought this was kind of interesting too. So here you're looking at a 4% increase in terms of what we saw in 2019. And then in 2020, we have a 4.6% decrease. And that's on 1 bedrooms or less. And then on 2 bedrooms, have, again, another 5% off. So we are seeing massive amounts of price reductions as well. So if you have any questions for me or anything like that, feel free to reach out to me. I'd love to help you out. Last year, my team and I, we were number 1 in terms of buyers, and we're number 5 in San Francisco transactions. So again, I am #tallestman in real estate. And if you have any questions, feel free to reach out to me. Thank you so much. Bye-bye.